Morning, Steve Walker, Client Portfolio Manager on npower's Optimisation Desk with the market update on Friday the 27th of March. Markets have opened slightly lower this morning after yesterday's excitement, although crucially Centrica have announced a capacity cap at the Rough storage facility. It's a reduction of around 900 MCM. Additionally, stories elsewhere of UK gas capacity tightening with Hornsea and ongoing Groningen production issues. There are also forecasts of cooler temperatures across the medium-term horizon. Those are the main things to look out for today. Please get in touch for additional information or keep watching. So starting with the gas market, Winter 15 is actually down 1 pence per therm overnight, although we're expecting a volatile day. As we mentioned at the start, Centrica have confirmed that they plan to cut the Rough gas storage facilities capacity by 900 MCM, around 3,000 PSI. This is expected to last for 6 months, or for up to 6 months, which is causing some uncertainty with how we approach looking at those numbers. This does mean if they remove that cap, you could see quite healthy injections through October and November, but obviously it reduces the total amount available for withdrawal if we do get a cold Q4, for example. Single train injection will start from around 22 terawatt hours. That's when they reduce the capacity at which Rough can take gas off the network in the summer, so you should see reduced demand towards the back end of the summer if they don't adjust the capacity levels that they've announced overnight. Additionally, Hornsea announced a reduction in their capacity yesterday, based on presumably their low expectations of volatility in the coming years. Hasn't really done all that much in the last couple of months, so it's not necessarily a price mover, but it certainly adds to that sentiment. On top of that, there was stories surfacing yesterday of the residents in the Groningen area of Holland suggesting that production should be curtailed until a thorough risk assessment had been made to drilling activities. Really the main drivers this morning. But to compound that further, we do have cooler temperature forecasts overnight, around 10 MCM a day. Early short closing line packs are predicted, around 9 MCM there, and reasonably high CCGT demand, almost 40 MCM. So looking at that higher CCGT demand in more detail in the power market, wind feed-in has dropped remarkably from yesterday and ahead of tomorrow, down to below 2 gigawatts. Load factors, as we mentioned earlier in the week, are set to improve from the weekend to well over 50-60%, making next week potentially quite soft on the CCGT demand side of things. French interconnector imports are still way below capacity at around 500 megawatts this morning. That's as a result of increased exports to Belgium and lower nuclear availability. Further afield in oil markets, seen a nudge lower by around $1 a barrel overnight after again a particularly volatile move higher yesterday. Suppliers are expected to be largely uninterrupted as a result of the airstrikes, although there are conflicting reports, given that although Yemen isn't a huge producer, it's a key oil transportation route. That's something we'll be looking into more today. That's it for the morning update. Have a good day.